All right, so we've got kind of a head-spinning topic today.
Yeah.
We're looking at this really wild space where like the old school world of finance, Wall Street and all that is bumping right up against the bleeding edge of crypto.
Absolutely.
And you all sent in a ton of great material about this.
Fascinating.
Yeah, exploring this, this whole world of bringing real-world assets onto the blockchain.
It's a big deal,
right? All the excitement.
Yeah.
But then also some of the kind of like the dark side.
Yeah, the risks. Yeah.
Yeah, the risks, the challenges.
For sure.
And really want to unpack that for you today.
Yeah. I think we have a really good spread of sources today too.
Yeah.
We've got 99 Bitcoins, Finance News, TR Crypto, Crypto Slate, Ledger Insights, Trading View News, Crypto Front News, FX Empire.
So really the whole gamut.
Yeah, gives us a good overview, I think, of all the different angles.
Yeah, and that's what we're going to try to do for you today is to kind of cut through all the noise and really understand what's driving this whole push to bring real-world assets, which we're going to call RWAs, because it's way easier to bring RWAs onto the blockchain and what could go wrong.
Yeah, what are the pitfalls?
Yeah, and to really make this concrete, we're gonna look at this recent hack of this RWA platform called Zoth.
Right.
They lost $8.85 million.
Yeah, it's a big one.
So
that should be interesting.
Yeah, so let's just start with the basics.
Yeah.
What are we even talking about when we say real world assets?
Sure. So basically, you can think about real world assets as physical things or tangible things that have value in the real world.
Okay.
So
like my coffee cup.
So like real estate would be a good example, like buildings and land.
Got it.
Or financial instruments like bonds, commodities like gold or oil.
Yeah.
Even private equity.
Oh, okay. So like a company.
Yeah, ownership in a company.
Okay. So it's got to be something that you could like...
Yeah, something you could touch.
Touch or represent something you could touch.
Right, exactly.
It's not just like Bitcoin floating out there in the ether.
Right, yeah, exactly. Yeah. Something that's tied to the physical world.
Got it. Okay, so then how do you get something like a skyscraper or a barrel of oil onto a blockchain?
That's where tokenization comes in.
Okay.
So... tokenization is basically taking the value of that real world asset and turning it into a digital token on a blockchain.
Okay.
You can kind of think of it as like a digital certificate of ownership.
Okay.
Or like a digital share in that asset.
Got it. So instead of having like a deed to a piece of property, you'd have like a token that says you own this much of it.
Exactly. Yeah.
Okay. That's pretty wild.
Yeah, it's a big idea.
Yeah. So why go through all this trouble? For you, the listener out there, like why bother tokenizing things?
So there's actually a lot of advantages to this.
Okay.
One of the biggest ones is fractional ownership.
Okay.
So like instead of having to buy an entire building, you could buy a tiny fraction of it. Represented by these tokens.
So like a share of a company almost?
Exactly. Yeah, very similar.
Okay.
And that makes it way more accessible to more people.
Right, because not everyone has skyscraper money lying around.
Exactly right.
Okay, so that makes sense. That's a big one. What else?
Another big advantage is liquidity.
Okay.
So like if you try to sell a building, it can take forever.
Yeah.
Like months or even years.
The whole thing.
Yeah, but with tokenization, you could potentially trade it much faster.
Okay.
Like on a digital exchange.
So like selling a stock almost.
Yeah, exactly like that.
Interesting.
And then there's also like the management and the trading of these assets.
Okay.
It can be a lot more efficient and transparent on a blockchain.
Gotcha. So like less paperwork.
Yeah, less paperwork, fewer middlemen.
Fewer middlemen, faster transactions.
Exactly.
Okay. I'm starting to see why people are excited about this.
Yeah.
So, speaking of excited, the sources we looked at had some pretty bold predictions about how big this whole RWA space could get.
They did some were really optimistic.
Yeah, like what were they saying?
Well, Binance News, they were citing some industry reports.
Okay.
And they said the market for RWA tokenization could hit $30 trillion by 2030.
$30 trillion?
Yeah.
That's like a hard number to even wrap your head around.
It is a really huge number.
Yeah, so what's making people think it could get that big?
So one of the main drivers is that financial institutions are starting to get involved.
Okay, so like the big traditional players.
Yeah, exactly.
Interesting, so they're starting to take notice.
They are, Initially it's probably going to be more like the agile players, like family offices, as Jesse Nuxon from Bitfinex Securities said. But eventually it's expected that the mainstream institutions will jump in too.
Right, because they see the potential to make some money.
Exactly. It's all about the bottom line.
So what's in it for them specifically?
Well, for them, it's about expanding access to a wider range of assets.
Okay.
And unlocking new opportunities for trading and revenue.
Okay.
It's about making illiquid assets more tradable.
Got it.
And creating more dynamic markets.
So basically it's about making more money.
Yeah, pretty much.
Okay. And Binance News also said that even if it doesn't hit that crazy $30 trillion mark.
Right.
Even if it only gets to like 10 trillion.
Right.
That's still a massive increase from where we are now.
Absolutely.
Right.
Yeah, they said it would be like a 54-fold increase from the current market value.
54 times bigger.
Yeah, that's huge.
Wow.
And that includes the stablecoin market too.
Right, because right now stablecoins are like the big thing in the RWA space.
Yeah, they're a big chunk of the on-chain asset value.
Yeah, but the real growth is expected to come from other types of RWAs.
Right, that's right. Yeah. Things like tokenized securities, like bonds and stocks, and tokenized treasuries.
Interesting.
Those are the areas where people think the real growth is going to be.
So it kind of sounds like RWAs are on a similar trajectory as like Bitcoin.
Yeah, that's a good comparison.
Right, like Bitcoin started small.
Yeah.
And then it kind of blew up.
Right, especially when institutions started adopting it.
Yeah, like with the whole spot ETF thing.
Exactly.
So the thinking is that as the regulations become clearer, and the tech gets better, more and more institutions are going to jump on the RWA bandwagon.
That's the idea, and we're already seeing some early signs of that.
Oh, really? Like what?
Well, Binance News mentioned that BlackRock and UBS Asset Management, they're already running tokenization pilot programs.
Wow, so the big names are dipping their toes in.
They are. They're starting to explore it.
And it's not just the big traditional finance companies, right?
Right.
There are also these like crypto native projects that are building out this whole RWA ecosystem.
Yeah, absolutely. CryptoFront News and FX Empire both highlighted Mantra as a leading RWA token project. They've got a pretty significant market cap, and they're really focused on navigating the regulatory landscape and building a full stack RWA platform.
So they're like the trailblazers.
Yeah, you can say that.
Okay. Who else?
Ondo and Maker were also mentioned. Ondo is focused on tokenizing treasury bonds.
Got it.
And Maker is working on decentralized stablecoin applications backed by real-world assets.
Interesting. So these projects are like building the infrastructure.
Yeah, exactly. They're laying the groundwork
for this whole RWA world.
Right.
And it's not just about making things easier for the big institutions, right?
Right.
CryptoFriend News also talked about how RWAs can make finance more accessible.
Yeah, that's a big part of it. It could give people access to investments they couldn't touch before, like commercial real estate or private debt. And they could invest smaller amounts.
So it's like democratizing finance.
Exactly. Yeah, that's the goal.
Interesting. And it's not just the crypto world that's changing.
Right.
Even the traditional finance world is starting to adapt.
Yeah, for sure.
Like Ledger Insights reported that the DTCC, the Depository Trust and Clearing Corporation,
good player.
Yeah, the big one.
Yeah.
They're joining the ERC 3643 association.
Interesting.
Yeah, so that's a pretty big deal, right?
It is. I mean, the DTCCC is like the backbone of securities clearing. The U.S. and the world's largest central securities depository.
So they're like the gatekeepers?
Pretty much, yeah.
And they're joining this group that's focused on setting standards for permissioned RWA tokens?
Yeah, so that's a big sign that the industry is moving towards standardization.
Okay, and ERC 3643 is all about creating a framework for how these tokenized assets are issued, traded, and managed in a regulated environment, right?
Exactly, yeah. It's about making sure things are compliant and investors are protected.
Got it.
And it's for permissioned tokens. So there are controls on who can hold them and trade them.
So not just anyone can get their hands on them.
Right. It's important for regulatory compliance.
Makes sense.
And Ledger Insights also pointed out that the DTCC's own tokenization platform called Composer X, it supports Ethereum-compatible chains. And ERC 3643 is one of the key standards they're working with.
So they're really embracing this whole blockchain thing.
They are, yeah. It's pretty remarkable.
And this ERC 3643 association. Is not just the BTCC.
Right.
There are other big names involved too, right?
Yeah, there are companies like Apex and Invesco. They're members too.
So it seems like this whole RWA thing is really gaining traction.
It is, yeah. The momentum is building.
And CryptoFront News mentioned that even giants like BlackRock and JP Morgan, they're keeping a close eye on RWA developments.
Yeah, they're definitely paying attention.
So it sounds like things are looking pretty bright.
Yeah, there's a lot of potential.
But we did talk about those risks earlier.
Right.
And the Zoth hack is a really good example.
It is, yeah. It's a stark reminder of the security challenges in this space.
Yeah. So for those who didn't hear about it, Zoth is this platform built on Ethereum that's focused on bringing RWAs onto the blockchain.
Exactly.
And they got hit with not one, but two big hacks in a very short time.
Yeah, that's right. The first one was back on March 6th.
Okay.
They lost about $285,000 from a Uniswap v3 liquidity pool.
Ouch.
Yeah. And then the second one, which was much bigger, happened on March 21st.
Okay.
And they lost $8.85 million in digital assets.
2 hacks in 1 month.
Not a good look.
That's pretty alarming.
Yeah, it definitely raises some red flags.
So what happened with this second bigger hack?
So, from what security analysts are saying, it looks like the attackers got into Zoth's deployer wallet.
Okay, and a deployer wallet is like?
It's basically the main account that was used to set up the smart contracts for the Zoth platform.
So if you get the keys to that wallet, you basically have the keys to the kingdom.
Pretty much, yeah.
And Cyver's Alerts, which is this real-time blockchain security monitoring service.
Right.
They were the first ones to notice something fishy going on.
Yeah, they picked up on a suspicious transaction related to Zoth.
So what did they see that tipped them off?
So they noticed that a key smart contract in Zoth's system, a proxy contract called USDO BPP Subvault Upgradable.
That's a mouthful.
Yeah, I know, right?
Okay.
But anyway, they noticed that this contract had been upgraded.
Upgraded?
Yeah, to a new version.
Okay.
And this upgrade was done by an address that Cyverse thought was suspicious.
Okay, so someone was messing with the code.
Yeah. And the upgrade happened about 30 minutes before the funds were moved out.
Oh, so that's not a coincidence?
No, definitely not.
Okay, so back up for a sec. What's a proxy contract?
Yeah.
And why is upgrading it a big deal?
Sure. So proxy contracts are pretty common in DeFi.
Go ahead.
They let developers update the code of a smart contract without having to completely redo it, which can be a huge pain.
Right.
So you can think of it like a signpost that points to the actual rules.
Got it.
Upgrading the proxy contract is like changing where that signpost points.
Okay.
So it's pointing to a new set of rules.
I see. So in this case, the attackers changed the signpost.
Yeah, exactly.
To point to their own malicious code.
Right.
And that's how they got control of the funds.
Exactly.
Okay, so they got into the deployer wallet.
Right.
Upgraded the proxy contract, and then what?
Then they drained $8.85 million worth of Zoth's USD0 plus stablecoin.
$8.85 million.
Gone just like that.
Man, that's a scary thought.
It is, yeah. It shows you how vulnerable these systems can be.
So what do they do with all that stablecoin?
So they swapped it for DAI pretty quickly, which is another stablecoin. And then they moved the DAI to a different address, and then Peck Shield, which is another big security analysis firm.
Okay.
They tracked the funds.
Okay.
And they said the DAI was exchanged for about 4,223 ETH.
So they turned it into Ethereum.
Yep.
Which was worth about $8.3 million at the time.
Right.
So basically they cashed out.
Yeah, pretty much.
And what did Zoth do when they realized they'd been hacked?
So, Cyverse noticed that Zoth's website went offline.
Okay.
Like right after the hack.
Oh, so they went into damage control mode.
Yeah, basically. They put the site into maintenance mode. And they put out a short statement on X saying that they were investigating the breach and working with partners to fix it.
But they didn't say how the hackers got into the deployer wallet in the first place?
No, they haven't released any details about that yet.
Okay.
They said they'll give a full update once their investigation is done.
Okay, so we'll have to wait and see. But this is the second big hit for Zoth this month.
Right.
Remember, they lost that $285,000 from the Uniswap exploit earlier.
Yeah, that's right.
So it kind of makes you wonder about their security.
Yeah, it definitely raises questions.
Like TR Crypto pointed out, these repeated failures could attract attention from regulators.
Right.
They might start asking some tough questions.
Yeah, for sure.
And this whole thing with proxy contracts seems like a bit of a double-edged sword.
It is, yeah.
On the one hand, they make it easy to update things.
Right.
But on the other hand, they create a single point of failure.
Yeah, if someone gets those private keys, they can do whatever they want.
And that's exactly what happened with Zoth.
Yeah, unfortunately.
So what are security experts saying about how to prevent these kinds of hacks?
Well, Crypto Slate talked to some experts.
Okay.
And they said that Zoth could have avoided this.
Really?
Yeah, if they had better key management.
Okay.
Like using multi-signature schemes where you need multiple people to approve a transaction.
So it's like having 2 keys to a safe.
Exactly.
Okay.
And they also said that real-time monitoring would have helped to catch any weird contract upgrades or fund movements.
Right. So you can stop the hack before it happens.
Right. So you can stop the hack before it happens.
Yeah. Or at least minimize the damage.
Okay. That makes sense. So did Zoth offer to pay back the users who lost money?
So, Crypto Slate said that Zoth is offering a $500,000 bounty for info that leads to the hacker.
Wow, $500,000.
Yeah, that's a lot of money.
Yeah, so they're serious about catching this guy.
Yeah, they are.
Yeah.
But they haven't said anything about reimbursing the users yet.
Oh, okay.
So that's still up in the air.
Got it. But this whole Zoth situation, it's not like a one-off thing.
Right.
TradingView News pointed out that February was a really bad month for crypto security.
Yeah, it was brutal.
Like over $1.5 billion was stolen in just 4 major incidents.
It was a rough month.
Yeah, and the Bybit hack, that was a big part of it. Yeah, that one was attributed to the Lazarus Group.
The Lazarus Group.
Yeah, they're like a North Korean hacking group.
Wow, so this is like international espionage stuff.
Yeah, it can get pretty serious.
And there were other big hacks too, right?
Yeah, there were like Ionic Money.
Okay.
They got hit with a social engineering attack.
Okay.
Where the hackers manipulated LBTC collateral.
Wow.
And then there was Zuckland, which is a lending platform on Starknet.
Okay.
They had a vulnerability in their smart contract.
Okay.
That caused a rounding error.
A rounding error.
Yeah, no, right?
So even a tiny mistake can cost you millions.
Absolutely.
And then there was Infinity, the digital bank in Hong Kong.
Right.
They got hacked because a former employee's private key was compromised. So it wasn't even a technical flaw.
No, it was an inside job.
Wow.
Yeah. So it just goes to show you there are all sorts of ways these systems can be attacked.
Well, it's kind of overwhelming.
It is. Yeah. It's a lot to keep track of.
So where does this leave us? On the one hand, we have this amazing potential for RWAs to change the world of finance, make things more accessible, efficient, transparent.
Right.
But on the other hand, we have these constant security threats.
Yeah. The risks are real.
Yeah. And those risks can lead to huge losses.
Absolutely.
So how do we reconcile these two things?
That's the big question, right? It's like a balancing act. We want to embrace the innovation and the potential for good.
Right.
But we also need to be realistic about the risks.
Yeah. And take steps to mitigate them.
Exactly.
And that's why it's so interesting that groups like the DTCC are getting involved in setting standards.
Right.
It's like the old guard is coming in and trying to bring some order to the Wild West.
Yeah, trying to create a more secure and regulated environment.
Right. And that's probably a good thing.
Yeah, I think so.
So to sum it all up, RWA tokenization is a super exciting development.
It is, yeah.
With the potential to really revolutionize finance.
Absolutely.
But as the Zoth hack showed us, there are still some serious security challenges to overcome.
Yeah, security is paramount.
And that brings us to a really crucial question for you, the listener.
Okay.
How can we balance this incredible innovation with the need for rock-solid security?
Right.
How do we protect investors and build trust in these new systems?
It's a tough challenge.
Yeah, it is.
But it's one that we need to figure out.
Absolutely. Because this whole intersection of traditional assets and blockchain technology, it's not going away.
No, it's here to stay.
Yeah, and it's definitely something worth keeping a close eye on.
For sure.
So thanks for joining us for this deep dive.
Yeah, thanks for listening.